Alright guys, well Tesla is on a massive run right now, and it seems like people are turning around and getting more bullish on robotaxi, and it seems like Wall Street may be coming around to Tesla altogether. But of course, like always, there are some bearish concerns as well with Tesla that we absolutely need to discuss. So let's talk about valuation, exactly what's being said out there, and I'll give you my opinion on all of it, guys. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. Some of you guys understand you're going to be a little bit upset. That's okay. We can disagree on a lot of these sorts of things, but at least you know you're getting an honest take, not just a to the moon and I don't know, reasons and stuff like that. You're not going to get that here. That's not what I do. And the reason why is you don't have to do that in order to have a great average in Tesla, own a ton of shares, and know you're not a bear if you just think that, hey, the price is overvalued at $400 back in 2021 when everybody told me I was a bear then. And then, of course, even, I don't know, last year I bought it twice in 140s, 160 range or so. And somehow I was a bear then too. These things just don't make any sense to me, guys. I mean, I don't understand it. I'm a long-term shareholder, hold shares for years, been buying almost every single year since 2020, but yet somehow I'm a bear. I don't know. I haven't sold a single share either of Tesla, but somehow you're still a bear if you just basically say something's overvalued, or I'm sorry, I don't think it's going to be a $87 trillion market cap next year or something like that. I don't know, guys. Just ignore that sort of stuff. But let's see what Wall Street's saying here and see if we can get down to any sort of truth and see if they're on track, off track, or what the heck's going on with those guys.
Time now to spotlight Tesla. Shares gaining more ground today, up a little more than 2%, extending their advance this month. Joining us now for insight, we've got Seth Goldstein, equity strategist and resources chair, EV committee, Morningstar. Seth, thank you so much for joining us today. We've got a few things to dig in today when it comes to Tesla. We're seeing a Reuters report that they're restarting some component shipments from China. Obviously, that was a headwind. I'm sure you remember Elon Musk called out, even though they have less exposure to tariff risks, such as like a Rivian or Ford. There's still some exposure, but it looks like obviously with this 90-day truce that limits the challenges there. What's your view on how much the shares have advanced this month and the catalyst around that?
Well, we think as we've seen good news that's led to a broader market rally, including a tariff temporary reduction between the U.S. and China, and it seems like the first U.S. trade deal was signed and more will be maybe coming in the near future. The market's getting more optimistic that the tariff situation and the economic uncertainty may not be as big of an impact for automakers in general, and especially Tesla, where Tesla is a luxury automaker today. All of its vehicles sell well above the average price point for autos. And so oftentimes when there's economic uncertainty, consumers could hold off on a bigger ticket item, which makes the 2025 deliveries forecast more uncertain for Tesla following an already down first quarter. So Tesla needs to make up ground if it even wants to break even as far as number of deliveries in 2025. So
yeah, I mean, I can't argue with that. Obviously, it's the whole car industry. I don't care whether you want to peg them as luxury, peg them as whatever. Doesn't matter at this stage. The whole car industry as a whole has had a really, really hard time. Now, obviously, a lot of folks bought into the hype of, oh, Tesla's exempt from that. That doesn't, yeah, it clearly does. Clearly, they are cyclical because 80-something% of all the revenue comes from the vehicle side of the business there. Obviously, I think that will look much different in the future. But for right now, that's what you have to go off of. And unfortunately, right now, they are cyclical. And so it's still a struggle. Now, is it exclusive to Tesla? That remains to be seen here. Let's see what happens with Tesla over the next quarter or two. And then, of course, let's see what happens with the rest of the automakers to see if they start to see an uptick back up. And Tesla doesn't see an uptick back up. That's a problem there. Of course, if they all start moving back up there, that's obviously a good sign for the auto industry as a whole. But no matter how we slice that, just some of the tariff noise kind of going away, starting to calm down, deals getting struck, whatever the case is obviously going to benefit all of them as it kind of works its way through the system there and as people get used to it and kind of move forward with purchases, as opposed to whenever you have a bunch of uncertainty. He's right. People get very, very uncertain with large purchases and tend to wait.
Those more economic uncertainties, more optimistic news coming for Tesla. Now I think shares are rallying and the market's focusing more on the autonomous vehicle robotaxi testing that's coming up next month in Austin as a catalyst for shares as Tesla aims to launch its robotaxi service as early as next year.
Okay, so let's talk about UC.
And so you hear stuff like that and you're like, that could be one of the reasons why, of course, the whole market's rallying right now. I mean, just look at what Palantir's done over the past month or so. I mean, just insane moves. and a lot of great stocks. Obviously, that's wonderful for us as shareholders. But of course, everything comes back to that valuation, which we'll talk about here in just a minute, in regards to Tesla, in regards to the robotaxi hype and all the other stuff like that. Until it had something meaningful in the bottom line, that's just simply trading news for traders to play games with. And there's nothing tangible there that's going to make the valuation cheap all of a sudden or anything else of that nature. Just the reality of the stock market and understanding how the stock market works. And folks that don't want to believe that are the same folks who bought the highs, bought at 400, 4 years ago. They bought at 480, over the Christmas time because it's coming to thousands right around the corner and stuff like that. It's just simply fool's gold in the end. Obviously, I tend to win if that sort of stuff happens because, again, I own a bunch of shares. But nonetheless, that's definitely how we get in trouble as investors. So for me, I'm excited to see them doing that, but it's going to be a process that takes time. Robotaxi is going to take time. Approvals are going to take time. Just getting the technology right. We still don't have full FSD, much less something like robotaxi being effective, approved, regulated, and everything else that needs to happen in the first place. So it's nice seeing the first steps, but people counting revenue this year or revenue next year, I'm sorry, just I don't see any way, shape, or form we have any meaningful revenue for years. Again, first step is solve FSD. It's not there yet. It's been 1 year away now for 8 years. So we're still waiting. I don't think we're another 8 years away, but I definitely don't think it's all the way there yet. And definitely not to a point to where all the other hoops that you got to jump through that we've talked about 100 times before, you got to jump through in order to happen. They're not there yet.
Value for Tesla at $250 a share. It's nearly $100 beyond that right now. You had that view before this news about tariffs. You still have that view. Why do you still have that view?
Well, our view is that Tesla will see deliveries slow down this year, especially as we saw a down first quarter. And we think that the general current product lineup is about at market saturation. However, we're very bullish on the robotaxi long-term outlook. While we don't think the robotaxis will start in service next year, which is what Musk wants to do, we do think they'll start by 2028. And over the time, that will be a more important value driver and faster growing value driver for Tesla. So we thought Tesla was well positioned versus other automakers to see less of an impact from tariffs. We think some of the company's ongoing cost reductions would result in either Tesla not having to raise prices as much or being able to eat more of the cost of tariffs and not raise prices at all if it wanted to gain market share. So while we thought there would be near-term uncertainty for Tesla before tariffs, we still see a bright long-term future, and that's the bulk of our 250 valuation driver.
Oh, we can debate the price, but I can't argue with the logic there. I mean, obviously, we don't know what delivery is going to be because we haven't gotten guidance, right? Here we are 2 quarters in, hadn't given guidance yet. And before anybody starts, all the other automakers gave guidance at the beginning of the year. Tesla was the only one that didn't. Of course, they've since suspended their guidance, which of course makes sense. But at least we could take a look and see at least have a general idea. Hey, is Tesla going to see, or they think they're going to see a big pickup this year? Is that big pickup going to come next year? Kind of some other things like that. They could have given us some color on it. They just haven't. So we're all purely guessing on that particular part. Robotaxi, hey, I'd be very, very pleased if we see it, starting to scale in 2028. That would be absolutely phenomenal. Definitely would not complain at all about that. I don't feel that's a crazy timeline or crazy too aggressive or crazy too conservative either at that particular point stage. And of course, mass adoption and a lot of other things like that take time. So it being a massive revenue driver, that may be a few more years after that. Maybe not. Hey, it'd be great if it doesn't. Again, I win if it's not. But I'm trying to be realistic here whenever I think through the entire timeline there. That seems like a very, very reasonable, kind of mid-tier timeline there. Of course, it could happen more aggressively. I really hope so. I win if I do. You guys win. You guys as shareholders, you win if you do. But so far, very, very reasonable.
Do you think that there is a potential catalyst with this cheaper Model Y, or do you think it's too cheap in terms of the impact that it could have to margins?
Well, I think Tesla will not launch the vehicle until they're ready to make it profitable. And Tesla aims for about a 20% gross profit margin on all of its autos. So I think when Tesla launches this and ramps up production, it will be in line with at least the automotive segment average. So I think the vehicle will be a driver, but at a lower price point, you're talking about a lower dollars impact on a profitability. But I do think it will be the key driver for Tesla deliveries in 2026, returning to growth, because this new, more affordable SUV, while we don't have all the specs yet, I'm expecting will come out at a mid $30,000 price point. That puts it comparable to Toyota RAV4s, Honda CRVs, which for the affordable mid-sized SUV market, those are the 2 largest selling vehicles. So I think we'll do very well with consumers.
Yep, I agree there completely. That's definitely the market I think that should continue to go down market. I really think that's where Tesla is going to thrive long term, where we're going to see the big long term growth. And of course, the adoption with EVs, the adoption with the technology, and everything else that's going on there. The more hands you get it into, the easier that will come. And I do believe that, hey, going down market, I think that's more their strength, more importantly, especially, you start getting into more of the manufacturing niches and things of that nature. As you really start to drill down on the engineering and some of the tech behind that piece specifically, that's where they have a massive advantage over legacy auto as well. So really, really like to see it. Again, I could see that cheaper model doing better than expected, depending upon when it launches, of course, even as early as this year, if we get it early enough, and to really pick up sales again, if they're able to hit those price targets. Of course, if it ends up being much higher, okay, at that stage, may not be as big of a hit, but any step down into the lower and lower ranges for me is a big bullish sign for Tesla.
Let me ask you this, Seth. So there was a Financial Times report today about this special committee that the board has formed to, deal with this issue around Elon Musk's pay package. Kind of felt like that was on the back burner, but there is, it's still going through court. They've formed this special committee that they're weighing this new stock-based pay deal or alternative compensation. What's your view on that, and what it signals with regard to confidence for Elon Musk as just retaining his role?
Well, it's been my view that Elon Musk will be able to retain his CEO role as long as he wants to for the foreseeable future. When we saw a report.
Yep, not going to disagree there. Don't need to go down any of the other rabbit holes and silliness. Obviously, we talked about some ways in the group there to optimize his role there at Tesla. But yeah, in terms of him going anywhere, no, not going anywhere unless he chooses to.
Media in early May that the board was considering a replacement, we saw Tesla shares down. We see Tesla shares up today, and I think the Financial Times report is a key driver of the shares being up today. And so that really highlights the key person risk for Tesla, where the market feels that if Elon Musk is going to leave, we'll see market confidence in Tesla decline. But any news that would lead to Elon Musk staying longer would lead to the market being more optimistic about Tesla's growth prospect, because Tesla's ultimately trying to transition itself from an automaker into an autonomous vehicle provider and a humanoid robot provider, which is a pretty big business transformation. So if the Tesla is going to be successful in this transformation, Elon Musk is the person to lead. And I think the market will, move shares based on the likelihood that he stays longer.
Yeah, I agree there. And I don't think he's going anywhere regardless. He's not getting 1/20th of the pay, 1/100th of the pay in some cases, as he would get at Tesla, regardless of how all the pay compensation things shake out. For those of you guys that don't believe that, go look at the highest paid CEOs and then see how much further ahead Musk is in terms of pay. And we're not even talking like, oh, he's 50% more. We're talking, tens of thousands of percent more than the next person. It's pretty insane. And no, I'm sorry, other companies aren't going to pay that in order to bring him on. It's just not going to happen there. So I think they're both kind of tied at the hip per se. One needs the other and the other one needs the other in order to fund all their future dreams on both sides. So yeah, I don't see Elon going anywhere anytime soon.
Okay, the likelihood that he stays longer. And he has obviously made the point that he continues to reiterate the point that Tesla is not a car company, it's an AI company. But I would gather that your approach is you are valuing it as a car company right now. Is that how you are valuing this? And is there the potential for a shift given what his vision is?
So when we're valuing Tesla, we value all of Tesla's businesses, including a new venture into robotaxis, a new venture into the Optimus humanoid robots, the energy generation and storage business, and other ancillary businesses such as insurance in the U.S. and charging. So we value all of Tesla. But the reason why we're a little more bearish on the stock versus the current market valuation is just we have a lower valuation for Tesla's robotaxi service. First, we think the robotaxi service won't officially be launched until 2028, 2 years after Elon Musk's goal of 2026. Also, we think it will see a lower addressable market because it's going to see competitors already from Waymo is already in 5 U.S. cities, growing to 7 next year. And so we don't necessarily think Tesla will benefit from the first mover advantage. Also, we see a far slower growth rate for deliveries in the coming years. While we're optimistic the new Model Y will grow deliveries as a whole, we don't think Tesla will get anywhere near bullish forecasts of Tesla being the world's leading automaker, even a top 2 or top 3 automaker. We think Tesla will grow, but generally the difference between our valuation and the bull case or the current market price is just we assign a little bit lower valuation to a lot of these businesses.
All right, so what we'll do is we'll go ahead and stop the video right there. So let's talk about valuation, exactly what he said about valuation, because I think that is the key to Tesla stock and understanding what's going on with Tesla stock, where it's going in the future, and all other good stuff like that. So I can't say that his logic in terms of why they have the valuation where they're at doesn't make sense. It absolutely makes sense. I personally value it as a tech company as well. However, this is where I think the bulls get it wrong, is there's not tech companies out there that trade for a significant length of time at, 150 PE is normal. It just doesn't happen. NVIDIA has crushed Tesla's growth, grown way more, yet it's trading in the 30s. It just, again, at some point in time, it always returns back to fair value. Those folks that say, no, it doesn't, Tesla always trades high, it is simply not true. Pull up a chart, pull up a historical PE chart, and you can see multiple times where it traded way down in the 30s, 40s, and 50s over the past 4 or 5 years, where you easily could have scooped up some really cheap shares. So for me, I absolutely value it as a tech company as well. Even though cars do make up 80% of the business, that's the reason why some cases I don't buy narratives like, oh, Tesla's not cyclical. Yeah, they are. Because 80% of the revenue, over 80% right now, is made up by that car. That doesn't mean in the future that won't change. That doesn't mean I'm immediately going to give them the same valuation that I would, the same multiple that I would Ford, for example, because then I'd have to give it like a 10. Which then that's where you get these crazy price targets of Tesla at like $60 or $80 or whatever the case is. That's how you get those. I'm not saying go that extreme, but I am dealing with the reality of when 80% of your business comes from the cars, guess what? It means your business is going to be cyclical. All the folks that disagree with me 2-3 years ago, well, here we are. It was clearly cyclical. It's the same exact thing with all the folks out there saying, oh, Tesla's going to make up 80% of the car market. Or there was even some folks that had it 100% of the car market by 2030 and 75% of the car market by 2025. Well, here we are, 2025, and they're not anywhere near any of those numbers, and they don't have to in order to be a great company. That, to me, is what's so crazy about these bull narratives is it can be an all-time great stock, return wonderfully, and do 1/10 of what all the bulls tend to put out there in these crazy price projections and everything else of that nature. To say Tesla is going to be the only robo-taxi out there is nuts. To say everybody's just going to all of a sudden want to ride in a robo-taxi and never drive their own cars again clearly doesn't understand the basic societal norm and want that is we want to drive our own cars. We're a car culture here in the US. Maybe overseas, I would agree. There's a lot of folks that would just, hey, am I getting in that versus public transportation? Makes a lot of sense. Here in the US, asking somebody to just take a robo-taxi instead of driving their car that has all their preferences and everything else in it that they want, all their stuff, and we carry a lot of stuff too. It's just not going to happen at that sort of scale here in the US, which of course is the biggest market that you want to conquer there. That doesn't mean it can't be successful, but all these crazy targets are based upon all these crazy growth numbers. Same thing with Tesla's going to go over 50% forever and just, well, cool. Those people that were projecting that out to 2030, it's like, man, you got to build like 3 gigafactories every year. And then, of course, sell all those vehicles every year. And it was just this insane number of, hey, when you're early stages, you can grow at those type clips repeatedly year after year after year. But then when you start becoming a mega cap stock and you become a behemoth like they are now, it's much harder. It's crazy to try to project out 50% growth rates for year over year over year over year for a decade. It's just not going to happen. It's not sustainable, and that's exactly how this is played out. So this is actually one of the more reasonable takes that I've seen on Tesla. To me, yes, Tesla's trading rich right now. It has been ever since that hype run started last year. And hey, that happens at times with Tesla. It's an exciting name. People get excited about it. That's great. I'm not saying run and sell or do anything else of that nature. Absolutely not. But I understand folks kind of wanting to back off at this stage. Let's see how much it runs up into the robo-taxi event there, all the hype and everything else. And then let's see how it does after that. Sorry, I just don't expect, Q3 or Q4 earnings to show this massive, billion-dollar, addition to the top line and the bottom line there. It's just not going to happen with robotaxi. But yet I've seen people out there talking about, oh, it's going to add a lot to Tesla this year. No, it's not. Hey, that's great if it does, but I don't think that's the most likely scenario there. And I definitely would not bank my price targets on there. And to me, especially with a stock like Tesla that's so volatile, the easiest way to invest in Tesla is just to do a simple DCA. We've said that for years now on this channel. If you don't want to do the modified DCA with me, you don't want to be the guy who's a quote unquote bear whenever I'm not buying the hype. And then of course, whenever I'm buying the fear, whenever all the negative news and everything kind of is at peak with Tesla, I don't know. That's just not the way I choose to do it. So if you don't want to do it that way, just do a simple DCA. It really is that easy, guys. And remember, if you want to learn more about investing and you want to work directly with me, I may have left something special down there in the comment section for you guys. It'll be the pinned comment down there where you get all that. You get free coaching, you get free courses, you get to be a part of the best 6, 7, and 8-figure Discord out there. Guys, there's so much involved in a membership. Just check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.